Hi, this is James Ing, and today I'm here with Jeff King, the insurance king.
There you go. Like that.
Jeff, maybe kick it off. Tell people sort of where you're based, what do you focus on, and what do you do?
All right. I'm Jeff King, and we're an independent agency. It's Ramey King Insurance. We're located in Denton, Texas, a little bit north of Dallas, Fort Worth. It's an old agency, actually back to 1881, but I've been here since 84. And we started and continue to be a generalist agency, but we have for the last 25 years, a large practice group in commercial real estate, primarily multifamily.
Okay. So I guess when do people call you? Do they call you at the beginning of a transaction? If they already own property, what's the best? When do people reach out to you typically?
We get calls, of course, at any stage. Sometimes we get called about a closing tomorrow, which is a little tight. Yeah.
I
But
think I did that to you this week, didn't
I did. Yeah.
I?
Oh my gosh, I forgot about the insurance. But definitely, we do a lot of work with new buyers who are just looking at a property. They're looking at the offering from the listing broker, and the broker has their pro forma on there in the listing. But now it's time for that potential buyer to do their own pro forma. And so it's handy. We do a lot of work and give indications. They call, they're buying this property, and they give us some information. Many times we're familiar with it, or of course, using technology, we can go look at the property and we will give them an indication at that point as best we can.
So
Yes.
give me the top five things. Let's say I'm buying a property in Texas. Top five things that are going to drive my insurance premium. Top five.
The good thing standard is the size of the property.
Okay.
And I'm not talking about the overall square footage of the property, it's the size per unit.
Okay. All
And
right.
our property insurance basis on the valuation, it's a set valuation per square foot. But
Okay.
if a person is buying say they're buying a 100-unit property, they're all 500 square feet, they're built as efficiencies, and that'll be 50,000 square feet. We're probably going to insure that in between 3.7 to $4 million of value. Take a similar property,
Sorry. I can't. My math is not that good.
all right,
What dollar per square foot should people ballpark there?
typically the minimum we run into is $75 a foot.
Okay, 75 a
But
foot, and
and actually,
then
so
okay,
I'll do that. If you have that 100-unit complex,
right.
they're 500 square feet each. That's 50,000 square feet,
Okay,
and at $75 a foot. And I've done this a few times, of course.
of course.
That's 3,750,000.
So is that the insurable value?
That's the
That
insurable value. It's a minimum replacement,
okay,
and most of the time we are writing blanket coverage. So that may be a little low for replacement, but we can use that value on any building.
okay. So that's just sort of your base. So if
It
someone
is.
comes to you and they're like, "Well, I got a 50 unit, but it's all townhomes and it's all 1,500 square feet," you do the same math.
That's correct.
Okay, so you get
But
yeah.
but
So
the same
insurable value there.
it is. But say you have that 100-unit, but as you said, it's built as townhomes or condos, and they're all 1,000 square feet.
Right. You do the same
So
math. Yeah.
that becomes a 100,000 square foot building at $75. It's 7.5 million.
Okay.
And
All right. So
that
insurable
makes a
values, number one. Okay. Number two.
value. Number two is frankly, the claims history of the property.
Okay. So they'll
And
ask, that's sort of lost runs for
the
people who
loss
are not,
run.
or lost runs. And then, so if something, let's say there's a fire at the property,
Mhm.
but it's, a small fire, it only hit one unit, it's $5,000. The guy doesn't claim it. Does that impact my insurance?
It shouldn't. Matter of fact,
Okay.
the buyer, they shouldn't even know about it. It was probably not turned into the carrier,
Okay.
and so
So
it should
only if
not.
they claim it, if the seller went back and claimed it.
That's correct.
Okay.
That's correct.
All right.
And
So have you seen people get that as a buyer though? Get the loss runs?
actually, as a buyer, typically the brokers won't release the loss runs until a property goes into contract.
Okay.
Now, that's kind of their upper hand on the deal,
Okay.
and I understand that. But if you're looking at a property, how do you determine claims? And now occasionally the broker will bring it up in just discussion. But if you're looking at the offering, especially in North Texas, if there's a new roof that's been put on in the last handful of years, most of the time it was put on due to a hail claim. Or if you have a building, say building 3 has just been built brand new. Well, why would anybody do that? Because building 3 burned to the ground a year ago or something like that.
Yeah, you got 1960s property
Yeah.
with 10 buildings, and one building was redone in 2019. It's a little suspicious, right?
So but it comes up in discussion occasionally, and the brokers are not trying to hide this information, but it's not just necessarily in the first conversation they'll have with someone.
All right, so we got square footage of the property. We got lost runs. Number 3.
It varies on where the property is, and not necessarily across the street from each other, but different regions of the U.S. carry different rates, carry different exposures. An example, we're here in North Texas. We have a hail exposure, and we'll have a higher rate based on that compared to a property in Kansas or Phoenix is one we're seeing a lot. They just don't have the storm exposure we have.
So what I've seen is, and for our conference, we're having a broker in Phoenix and a broker in Atlanta.
Oh, good.
In Houston, I guess it's pretty obvious it could flood. In North Texas, Dallas, or hurricane. Yeah.
The whole coastal thing with hurricanes.
Coastal flooding, hurricane. What about Austin, San Antonio? Do they have hail issues or no?
They do, but they don't get it as much as North Texas. And we will typically see rates drop as you go south from DFW.
So you got to go down I-35 down to San Antonio.
Waco depends who you're asking, but it's getting better. But once you get into central Texas, it typically improves.
Okay.
Although we send San Antonio and Austin a hailstorm about every 10 years to remind them where we are. But they got hit a few years ago. But typically it is better there.
Any issues in Phoenix or Atlanta?
Not that I've seen. Atlanta, they don't have as much activity, but it should be less there. It's far enough from the coast to escape that.
Okay. And
but properties can still have fires, and,
of course,
and they still have freak storms. But hail is just a big. The challenge to hail is so regional in nature and so broad in what it does, as compared to a tornado, which is scary.
Pretty narrow. Yeah.
A tornado can literally take my house out and miss yours across the street. It's just as that happens.
So we got size of the deal in terms of property size, square footage. We got loss runs. We got location. What would you say number 4 is?
We the claims is the construction details about the property.
So the age of the deal, or age of the property.
The age, but also we still run into issues with aluminum wiring.
Okay.
And occasionally we'll still see a bare aluminum wiring that has not been pigtailed or Kolar wired.
Okay.
But if they are, that's good to know. And a buyer should ask that.
Okay.
If a property is built somewhere in the 60s and 70s, not to say it has to have aluminum wiring, but it has a greater chance of having aluminum wiring.
Right.
I've even seen a property in the 80s built with aluminum wiring, but they've probably gotten away from that. Another issue in the last couple of years are the stab lock breakers, the Federal Pacific breakers. Obviously, those have been around since as long from the 60s and 70s, but it really only seems in the last couple of years that it's presented a challenge to carriers to ask about that.
So if, let's say someone's buying an older property, it's got aluminum, it's got stab lock, what are insurance companies require? Is that like a 30-day or 60-day replacement?
We've got a couple that will insure with them, which is rare, but they'll give time to replace it. We had one yesterday, matter of fact, that the carrier wanted to cancel it. We didn't realize that stab lock breakers. I don't think the owner did.
Okay.
And none of us are electricians and HVAC people, so sometimes you find out things about your property after you've bought it.
Right.
But we got a letter from the electrician and a bid, and the owner says we're gonna replace these, and so the carriers agree to continue the coverage.
So what about on a new deal? So let's say acquisition, you're going in.
They may be able to. I have one carrier that will write it.
Okay.
And so that's where we'll go. But it makes sense to budget that in as a buyer to replace it.
Okay.
And even where we do have a carrier that will write it, it's not too punitive in rate. And I'm not an expert in these risk management things, but if it improves your property, where if you replace some lamps, my understanding it costs $500 to $1,000 a unit to do that, so it's not insignificant. But if you're improving your property, it helps today, it helps tomorrow, and it helps several years down the line.
Okay. So we got size of the property, loss runs, location, age, construction. Anything else on that age piece? Like when you're looking through the OM?
We will typically look, there's 4 areas in updates. The age is not as relevant. I mean, we're still seeing some 60s and of course 70, 80 and 90 and newer properties. Anything after 2000 gets treated better from the insurance market.
Okay.
But anything prior to that, we're looking for 4 areas of updates. And unfortunately, none of these have to do with raising rents or improving the value but we look to the age of the roof. The older a roof is, the more damageable it is by hail, and maybe 8 to 10 years beyond that. We look at electrical updates, but most people don't do electrical updates unless they've gone in and done something major. Most people, you're not going to have people going down to the studs, pulling the wire out, unless it's a 100-year-old building or something. Right. But it may be they've changed the electrical boxes or pigtailed something in 1995. That counts as electrical update. HVAC updates. That could be your boiler or your chiller system. But if you have one that's centrally AC, you've got all those compressors have been changed out over time. And then plumbing updates, but plumbing updates are rare. Truly plumbing. I know there's a lot of work where people are changing out commodes and toilets for greater or lesser water usage, creating a qualifying for your green loans and things like that based on what they do with water restrictions. But those are the 4 main areas of updates we ask about, and actually they are looking at an offering, except for maybe the age of the roof. It's not something that really jumps out anywhere early on in the process.
Right. All right. So you got roof, electrical updates.
Yeah.
So you got roof, electrical updates, HVAC, and plumbing. Okay. On the edge. Okay. I didn't tell you to have 5, but do you have a 5th thing?
Let's see. We've talked about claims. Occasionally we're running into a crime score issue.
Okay.
Now that's not something anybody can control. And unfortunately, it's not anything that I can see going in, but it does come up. It's primarily a liability issue. They're concerned about the crime that may or may not be happening in the neighborhood. But where we'll hear that back once we've applied to a carrier for proposals, we run into that. And depending on the crime result, we run into difficulties being able to provide coverage for full assault and battery, things like that. And although that property itself may have never had an issue, probably hasn't. Now, if they have, we'll see that occasionally in a loss run. You'll see some event that happened 3 years ago, and those type of claims are rather ugly looking when they happen. But that's not something you could be standing in a neighborhood. We all have a feel of good property or that, but I've seen properties I would not have suspected that, but a carrier runs I don't know where they go for these crime reports, but it does come up.
So the 2, I would say, complaints that I hear on insurance is it's expensive and it takes a long time. So we talked about how to mitigate it being expensive. Talk about the process and like if someone, let's say I go into contract today, day 1, I call you, say, hey, here's all the information, the age of the roof, all that stuff. Then what happens on your end? And then when do I know the cost of insurance from there? Like that's what I want to know.
Okay, it's a kind of an open-ended question. It has more to do with human time work, but
just on average.
Well, it takes 2 to 3 weeks, but here's why it takes so long. My facetious answer, it takes about 10 hours of hard work spread out over 3 weeks. So what does that mean? But ideally today's Friday, say you and I talk or a buyer, we gather that information. Probably by Monday, we'll have the applications put together. And we won't have all the information because we rarely have all the information. We don't know updates. The loss runs aren't available yet. They're coming. We may have an idea of claims, but we send it to our carrier. Maybe we have it to 3 or 4 carriers that we think will be competitive on this proposal or this property. We'll send it to them, say it goes out Monday, and picture since we're all in the email world, but picture that stack of files on an underwriter's desk, and they just say put it on the top or put it on the bottom. I get to it when I can. And so we'll give them a few days, and we'll call the underwriter. Underwriter, want to check in on so-and-so property. Did you get their application? Do you have questions? And you'll hear their mouse going across their mouth pad. And they answer, yeah, I got that. I'll be looking at that. I'll have some questions for you. And they haven't looked at it.
Right.
It's just in the queue. But later in the day, you'll get the questions back. There's always questions. The things we've just covered, we rarely have that going yet. So we get back with the buyer or the owner. We try to gather that. Takes a few days to get that, and we send it to the underwriter. And let's just say we get it by next Friday again. And so we give till Monday or so. We call the underwriter. Underwriter, we sent those answers you wanted. What do you think? And you'll hear the same mouse pad going, yeah, I got your answer. Let me look at it. And sometimes that creates more questions.
Sure.
They get that. And say, well, let me look at it and I'll decide a rate. And usually about 2 to 3 weeks. And we're doing that with 3 or 4 different people.
Okay, sure.
And by a couple of weeks go by, we finally get those answers. There's dialogue between us and the owner and the buyer trying to gather this. And maybe they're dealing with the broker trying to get this and that.
Right.
Maybe the loss runs have come in now. And
so would you say 30 days is a good estimate?
Might be 30 days, but it's, as I say facetiously, it's about 10 hours of hard work spread out over that time, but it's primarily waiting on.
So you get the quote back. There's, accords 25 and 28 that the lender requests. We send that in, and now you guys have agreed sort of what you want in coverage. Now we send it to the lender. Lender figures out, all right, these, check. This looks good. Oh yeah, you missed this piece. Correct. What is the piece that most people are not covering that, let's say, Fannie Mae, Freddie Mac are requiring?
We're seeing that most of the time we'll have ordinance coverage, but sometimes we don't going in.
What does that mean? What is ordinance coverage?
Ordinance it's a unique coverage. There's 3 parts to it. It really comes up in non-conforming zoning properties.
Yep. Okay.
How it typically works, if a property is in non-conforming, I can think of one that we looked at a few years ago that was an apartment, but it had been built. They got a zoning approval years ago and changed it to multifamily. But if a property ever was vacant beyond a certain time, it reverted back to single family.
Okay. All right. That's actually not bad. I've seen industrial, retail, everything. Okay. But
typically if a property is damaged beyond, a building's damaged, and I don't know if this changes, but typically the example we see beyond 51%, the city will require it to be torn down as it's non-conforming. But without the ordinance endorsement, say it's burned to 51%, picture a straight line up and down. The carrier initially is only going to pay 51% of the claim.
Okay. So it's that additional 49 that you have to.
So the ordinance turns a partial claim into a full claim.
Okay.
The other part of ordinance will actually pay for that demolition. And the third part of ordinance, which actually comes into play more, has to do with requirements about the construction that raise the cost. An example, you had aluminum wiring, now you've got to go back with copper. Or you may have ADA type of compliant issues that were not in the original construction, because the insurance company initially is just wanting to pay you what you had.
Right.
And now you've got to spend $100,000 more due to new ordinance that have been in place since 1973 when it was built, and that's what ordinance pays.
Well, Jeff, I appreciate you coming on. I learned a lot, and what is the best way for people to reach out to you to learn more about you or get a quote on a deal?
They can call or email. We do have a team here. We have 5 people on the team, so it can be either one of us, any of us. But our website, my email is jeffking@rameyking.com or info@rameyking.com. Our phone number is 940-382-9691. And you mentioned timing. We like to learn about the deal as early as possible. But once it goes into contract, or you feel confident it's going to go into contract, you've already agreed, just haven't seen, let's start then, because this 30 days is, we end up taking every bit of it. I know that's aggravating to the market. I've had that come up once or twice, but
I
just waiting
understand.
on the underwriters and still trying to get, we may get a quote in from one underwriter, but we're waiting on that other underwriter we hope will be best. And so is our buyer. They want the best quote as well, for that matter.
Absolutely. All
So
right.
that's the time.
All right. Thanks a lot, Jeff.
All right, James, thank you. Have a good morning.